Hey guys, happy Saturday. I've spent the last couple days, the entire day, Friday and Saturday, reading through this latest prospectus, the ATM and forward contract agreement, and I prepared a beautiful presentation for you guys to explain to you all about forward contracts and exactly how this is going to work. But you know what? Just going to throw that in the trash and talk about in this video what actually matters. At the end of the day, it doesn't really matter what I say when I try and help people, because you got your nut jobs over here who are going to tell you that I'm giving you this information because I'm paid for by a hedge fund to scare you out of the play. And then we have the really kooky nut jobs on the other side who are going to tell you that I'm paid for by Adam Aaron or AMC or some social media network. All complete hogwash. As I've told you guys many times, I'm just a retail investor like you who reads the financial statements, reads the filings, listens carefully to what management says, looks at the cash burn and the box office revenue, and tries to figure out what management is going to do next. The content I try and provide you guys is not built around some crazy thesis that there are billions or trillions of naked synthetic shares, or that the management is working against shareholders and helping the shorts. My content is one thing, and that is I think that management is stuck in a very bad situation where the box office is not allowing the company to be profitable yet. It might get there in 2025, more likely 2026, and until then they are doing everything they can to ensure that the company survives, and you have to pay attention if you're going to be involved in the play as they take steps they need to take to ensure that survival, meaning raising cash, having enough liquidity, not going bankrupt. And if you're not paying attention to that stuff, you might be caught in the crossfire of dilution, as I have gone over with you in all 4 of my videos over the last 3 weeks since the Q3 earnings call. In each one of those videos, I talked with you about my concerns about the Go plan, my concerns about the cash position of the company, and my concerns about a potential for an equity raise, which we found out about on Friday. If you're in my Discord, I told folks weeks and weeks ago that you would hear about an equity raise from AMC on or before December 15th. And we got it on the 6th. So even though we're excited for the industry and AMC about Thanksgiving week being a blockbuster week, that does not negate the fact that so far we're only at about 1.5 billion of box office for Q4 with 3 weeks remaining, and Q1 is looking weak. So in the Discord, we've been talking for the last 30 days about what is this going to mean cash burn wise and dilution risk wise for AMC. And my message has been daily telling folks, prepare for dilution, whatever that means to you. Some people did nothing and some people took action. That is on each individual to decide. And here on YouTube, I've done my best to convey that to you guys as well. If you guys recall, back in January of this year, I said that for me, 2024 AMC is a swing trade only play because of the fact that the box office this year was not forecast to be high enough for the company to make a profit, and they still needed to do some work on the balance sheet. You were going to see things like debt for equity swaps, dilutive, and cash raises, ATMs, to keep up the liquidity on the balance sheet. That means you need to be very smart about entries and taking exits into any moves up, and don't stay positioned to be affected by that dilution. And that is exactly how I played AMC in 2024, and it's been a profitable year for me in AMC. I've managed so far to avoid every single dilution that they've done this year and still make a very market-beating return on AMC by buying the lows and selling into the highs. It was a bummer when I sold a few weeks ago in November after they announced the Go plan, and I really listened to what management was saying and heard them tell us that dilution was coming. I got out at break even after all that work I did buying at 407, 420, 419. I would have liked to make $1 and sell at 535 as it ran up over the past couple days. But I got out at break even because that's how worried I was about an upcoming dilution announcement. But it wasn't just the dilution that I'm worried about. It is the fact that the company is running out of shares, and they are going to have to address that issue. The company cannot leave itself with no cash raisability. And it is really that part two of what I think is going to come of why I am not in the AMC play at the moment. Now, you can do whatever you want. I really don't care what you do. Some of y'all are gonna stop watching this video right now, but let's go through what my concern is, and then you can leave me your comments down below. In the prospectus, the company tells us on page S11 that following the issuance of these 50 million shares, they will have 1.07 million shares left out of 550 million left to issue to raise any sort of money or pay off any sort of debt. And that is true. I put together this little spreadsheet table here to show you exactly where these shares are allocated and what is left. By my count, 684,000. The company's count, 1.07 million. Doesn't really matter. It's not a lot of shares left, and they're going to have to do something about that. This is listed in the risk factors of the prospectus, and anytime a company does a 10Q or a prospectus, I urge you to always go read and carefully consider the risk factors that a company is disclosing to you. Whatever the company is, make sure you're reading those risk factors. If we go back down to where they tell us they have 1 million shares left, though, they go on to say, highlighted in blue, as a result of only having 1 million shares left, we may in the future seek to obtain the requisite stockholder approval for the authorization of an additional number of authorized and unissued shares of Class A common stock. They are going to need to ask shareholders for some more stock in one manner or another, either asking for shareholders to approve additional shares in addition to 550 million, or another way to do that would be to do another reverse split. I don't know which one it is going to be, but they are telling you exactly what is going to happen right here in the prospectus. They go on to say, highlighted in green here, that if they ask for that shareholder approval and are unable to get it, if the no vote wins this time, that it would create substantial risk. And again, just like in 2023, I agree, it would create substantial risk, in my mind, catastrophic risk, if shareholders do not approve the company's request to raise money. I really don't care when that day comes, what you do. I just want you to understand the ramifications of your choice, and keep in mind what happened recently to Metamaterials, where the people who were pushing the shorts are in trouble, don't approve more shares. As soon as they voted no for more shares, the company filed bankruptcy. And that is probably what will happen with AMC, if you want my opinion right now. I'm not in the play. You guys do whatever you want. It's not all necessarily doom and gloom for AMC, though. If shareholders don't approve to increase the common shares, the company could issue more debt, which is just going to mess the balance sheet up and make this play a much longer mess while you're waiting for the company to get profitable. The other thing that they could do is anything really with the preferred shares. They could issue preferred shares to institutions. They could issue preferred convertible shares. There's so many different things they could do if they decide to stay in the fight, scrap it out, and avoid Chapter 11. But all of these things will still affect shareholders in a negative way. As I was thinking about all of that, I decided it really didn't matter what the details of this forward contract agreement are or exactly how it works, because for me, really, the thing that is important is the company's out of shares now, functionally, and they are going to do something about it. And then I started asking myself, why did they do the forward contract, and why did they do it with one entity? No, it's not because Goldman Sachs has billions of synthetic shares. But if you read carefully in the prospectus, through the forward contract, Goldman Sachs will have up to 50 million votes through the pledged shares that are part of that forward contract. Could that have something to do with an upcoming vote that the company is planning? I don't know. That is definitely a possibility. That's just my little tinfoil for you. I can't tell you for sure that that is the plan. But if I was AMC, I'd be looking for a way, again, to make sure if I need a vote, that I could get that vote to go in a way to ensure that I don't have to file Chapter 11. What I see from this management team is a team that is highly incentivized not to file Chapter 11 or Chapter 7. And perhaps this is a way, once again, to extend the life of the company until such time that the box office allows them to be profitable, maybe in 2026. And this cash raise right now is to get them through Q4 and Q1 into the latter half of 2025, raising just enough cash to survive until the latter half of 2025 when things should be better than they are right now. And I do think that Q1 is going to be weak, but the last 3 quarters of 2025 should be pretty good based on what we're hearing from all of the industry CEOs. With a volatile meme stock, anything is possible. I have folks in my Discord that are convinced based on the chart that the stock is going to run next week. I can't tell you what's going to happen next week. Maybe it will. Maybe it won't. That's a decision for you guys to make, each on your own, based on your own individual risk tolerance. I'm in this video just telling you what I'm looking at, what I'm seeing. Maybe I'll be right, maybe I won't. I don't always get everything right. This is how I feel today as of reading these documents for the past couple days. And maybe I'll change my mind. And there will probably be times in the future where I trade AMC. It's a fantastic volatility trading play. I have not been trading AMC because of somebody's notion about billions or trillions of synthetic shares or naked shorts. I don't care about that. It's a fantastic play with a lot of volatility that you can make a lot of money on if you get a good entry and you're willing to sell into any run-ups. And maybe you will get lucky if Roaring Kitty tweets and the stock runs up to $12 or $15 or higher. Who could say? I certainly can't say. I know that once the fog in my mind clears about what exactly is going on here, when the smoke clears and I can see what the company is going to do about the share count, I might trade AMC again. I will remain a A-list member. I will continue to support the company through going to movies frequently and spending my money, both on tickets and concessions, doing what I can to support both the company and you guys that remain in the play, because I do, at the end of the day, want to see everybody be as successful as possible given the circumstances that the company is in. I will also continue to provide ongoing coverage of AMC once a week or so, because there are just, frankly, far too many people out there giving you guys bad information, be it conspiracy or hopium. People that are talking about the stock who are not really looking at or understanding the financial statements. And at the end of the day, all of my DD comes from listening to management, looking at the financial statements, reading the filings, and applying common sense. That is what I have for you guys this evening. Let me know your thoughts down below. I am Tony Denaro. Thank you for watching, and I will see you on the next video.